Super excited about today's show. We got Samantha Phucas with All Western Mortgage here today. Talk a little bit about like the new home construction world. In my opinion, I got a lot of pros and cons that I'd love to talk to new home buyers about new construction, like what to look for, things that are good, things that are bad, and the main thing that we're looking at in today's conversation is get a little bit of your experience. You were behind the scenes doing the financing for the big builders out there, and talk a little bit about your experience. Let's maybe go into a little bit of your background, like where have you worked, and tell us a little bit about your experience with the different builders that you worked with from the new home construction world.
Yeah, well, thanks for having me, Ryan. Super excited to be here. I've been in the mortgage industry for 10 plus years now, 7 to 9 years in new construction. Started out as a processor, then a mortgage loan officer. So a lot of my experience is more on the finance end. So like you said, every loan program, every home is going to have its pros and cons. I don't know about which one is better. It's about what best works for you as the buyer and your timeline and your financial goals, right? I think going into new construction, the things that I see the most often are like costs, timeline, what's expected up front.
Sure.
Those are the things where we can probably dig deeper and uncover, for a lot of home buyers.
And that's one of the things like I look at is, I think my opinion, you go into a model home, and like let's say throw an example. You're in a single family neighborhood that says the starting price is $499, which we know that's nowhere near the price that you're going to get. But when a client goes into that price, and for an example, it's a $500,000 home, there's probably $200,000 worth of decorations in there. So the whole house is designed to grab that emotional side of the client. You walk right in the first step, and I've had clients that have gone through the sales experience. I know you were on the financing side, but the sales rep, there's extensive sales training that goes into these sales reps that work in new home construction. So it's like you walk in that door, you're emotionally attached to it, you want this home, it's got all the bells and whistles. It's almost a home that's almost unrealistic. Like most clients are never gonna have the home in that shape. Everything's picture perfect, thousands and thousands of dollars of decor throughout. So, but it pings on us that emotional side. And one of my frustrations is that we get a lot of phone calls, people that went under contract, didn't fully go through the numbers. Now they're like, I'm financially committed to this contract, and either the monthly payment's too high or it's too much money I got to bring to the table. And now they're kind of like, hey, did I make the right decision? So from the financing perspective, like how much goes into like qualifying somebody for new home construction?
Great question. So I always recommend, like, my timeline of the process is to talk to the lender first. Everyone may not agree with that, but I do think getting pre-qualified, and it's not just about what you qualify for, it's your comfort level. Like you said, right? We can qualify for $650, $1 million, but if you want your payment to be $3,000 a month, that's not the price point, right? So number one, get qualified, find out what that comfort point is, and then we need to decide where we're going to go from there, right? So to your point, going into the model home, a lot of things that I ask people to ask the salesperson there is what comes with the home, right? Is this the exact home that I'm going to be purchasing? Because some are already built, right? Quick move-ins, and then some are to be built, right? So you need to understand what comes with the house, what's an upgrade, what's not. Then you need to get a cost estimate worksheet. Some sales representatives can do it right for you right there in the model. Some can't, but then I would recommend sending that to a loan officer to just take a quick review.
And one of my recommendations, like going into that, like I feel like before you would go into a model home is like get qualified outside of the lender. You know what I mean? Like know where your strengths and weaknesses in the qualification. I really, in my personal opinion, unless you're very financially sound as a first-time home buyer, and a lot of times first-time home buyers, that first step into the new home construction because it costs more money. When you look at the cost analysis for new home construction versus resale, generally it's 2 to 3% more because builders don't pay state, at least here in Maryland, they don't pay recordation and tax transfer. So my thing for home buyers is that go get qualified before you step into a model home, and then have in the back of your head, like I have X dollars to spend for real estate. And if you walk into that model home and it doesn't marry up to your monthly payment, the amount of money you want to put down on a home, it may not be the best option for you. And that's one of the things I feel like they, going off our earlier point is that you walk in and you're emotionally attached. And when people are in emotions are attached to something, you want something, you will stretch to go and get it. And that's, to me, I feel like from the perspective of the financing is that a lot of people get over their heads because they emotionally get involved because of these model homes. They go in and these things are amazing. I mean, most model homes I go in, I'm like, I want that, I want that, I want that.
Right?
You know, like,
of course.
this is amazing.
Of
like,
course.
you know, like I was in one the other day and it's like Amazon, you know, putting me in morning mode and this, you know, the shades go up and music comes on. I was like, wow, this is amazing. I want to live here.
Open your garage
yeah,
for you.
exactly.
Yeah.
You know, so from the financing, what typically in a new home construction, what is the builder, what's the minimums they're looking for? Like type of financing, credit, that sort of thing.
Yeah, and so here's where it gets a little tricky, Ryan, because we just talked all about getting pre-approved before you go in there, right? Well, here's like the curveball. When you get in there, most builders have a preferred lender that they want you to work with, right? And they encourage you and incentivize you to work with them by potentially saying they're going to pay for your closing costs. And they usually call it like a seller credit. And depending on what community, what neighborhood, this could range from $5,000 to $30,000, depending on how bad they want to sell the home, right? So it gets a little tricky then too, right? Because that emotions are high. I'm going to offer you $10,000 on top of this to purchase this home. And it's sounding really good, but to your point, we don't know what that looks like, right? So the couple of things up front, like you said, typically the builder does not split transfer tax, so solely the customer's responsibility. Typically, earnest money-wise, you know, it's not 1%. I've had some builders require anywhere from $5,000 to $30,000 up front, depending on the home price.
And usually, like, I feel like the larger deposits are the more customization. So, like, if you're earlier in the stage and you're going in there and you're going to pick the colors of the floors and the countertops and the cabinet colors, so you're customizing that to your liking. Generally speaking, I feel like the deposit would probably be a little bit higher because the walkaway is a little bit more risky for the builder because you built the home custom to you. Now, if it's a ready to deliver home, I feel like they'd probably be a little bit more flexible in earnest money deposit. But in general, what you're saying is it's going to be more than a resale.
100%.
So like if you're going in there and saying, I want to buy this home, but the new home construction may be 5%, you know, deposit, where maybe in the resale world, 1%.
Exactly.
Now, how about like for what's ideally like down payment, credit with?
Yeah, great question. I know I got off track there. So different builders also have different what's called guideline overlays. So for example, typically FHA, you can go as low as a 580, right? Depending on your overall profile. There are some builder lenders that will not look at your file if you're not a 620 or above.
Okay.
And debt to income ratio, typically, for example, FHA can go to 56.99%. There are builders that have a hard stop at 50%, because what happens is the builder's lender is not set up to service the loan for 30 years. So it is sold on the secondary market, and they want to make sure that the investor that they sell it to, you know, is the person's not going to foreclose on or default on the loan, right? So they really tighten those guidelines, which can be hard because not everybody, as we know, fits into those molds. So that's something else to think about.
And I think that's like going back to like, you know, speaking to somebody like yourself, you know, and you know, you've went from the new home construction world and going into, you know, working with All Western Mortgage and now kind of like cover it all.
Yeah.
You know, it's a good starting point of saying, look, I always call it the financial checkup. Like if you're new, you're first time home buyer, or you're getting back in, you're looking to sell your home and get into the new, do a financial, you know, checkup. Like how are you, what's your strengths and weaknesses financially? Is new home construction an option for us? And what kind of money do you have set aside? Well, you need to know your income, where your payment's going to be, and how much money you're going to put into the process. And I think that is always step one before you want to go out and, you know, look at homes. And I do that a lot with my personal clients. Like, let's try to say you want to be $3,000 a month. If we go out and we start looking at homes that are going to cost you $4,000 a month, and then we have to go back and start looking at the homes that are $3,000 a month, it's going to be harder for you to transition into the market and say, I really like this home. But it's like going and test driving a Mercedes and then you have to drive a Kia. Exactly. So, you know, that's why it's so important, because it's easy to go into model homes. It's easy to go into open houses and get excited about homes. But before you kind of tease yourself, go get the numbers. I mean, because it's so important to try to start low and go high. That's always my opinion. Like if you want a 3,000 is your max, don't go look at homes that are 3,000. Look at homes that are $2,700 a month. And then if you're not finding the things, maybe expanding the territory, expanding the market a little bit, as far as maybe they moving up to that $3,000 a month. But I feel the one thing with real estate is that it's a long-term investment. it's never your forever home. The average home buyer stays in a home from 5 to 7 years. So over the next 5 to 7 years, if you look at this as like a stock, your house is an investment. How much is based on the market, where you're looking to purchase, is this stock going to go up? And, going back to the new home construction world, I feel like when you go and you look at a home that's one of the first homes being sold in a neighborhood of 300 homes, the pros and cons. The pro is over time, the value of that neighborhood is going to go up because the builder, as the sales increase, they're going to keep increasing the sales price. The negative side of that is you need to sell in 4 or 5 years and the neighborhood's not sold out. Why would somebody come and buy your resale when they can go buy new home construction?
Yep.
So, is that something you've seen in some of the neighborhoods that you've represented?
Absolutely. So like you said, I've had people's homes sit on the market 90, 120 plus days having to wait for a random cash buyer because, like you said, why would I buy your house if I can just go buy a brand new one, customization? Yeah. They're still building, right? So those are the things that you have to think about. If you're the first home, like you said, more than likely your value is going to be there and appreciate. But if the community is not closed out, you're competing with the builder, which is very hard, who's giving seller credit help, all of these things to push the home, and they're going to sell the home. I can guarantee you.
And not
that.
only to think about, it's kind of like the new car smell, but it's like the new home smell.
Yeah.
Like you're going out there like, wow, this is amazing. It's the new home. And one of the things I always like to do when I take somebody into a new home construction is show me a home that's getting ready to be delivered. Because when you go in that model home and, the wallpaper, the painting, the pictures on the wall, the flat screen TVs, the music that's playing, the shades, the blinds, go see a deliverable house. To see it. And if you're looking at a home, I think a lot of buyers come up and in the initial consultation, they're like, I want new. Because they think that a home that is used or, that's a little bit older is going to have issues. When we look at realistically, from a lending perspective, financing is a little bit tougher because you have to use, typically how many lenders are you getting a choice from in new home construction?
You're not getting much of a choice.
You're not getting much of a choice. So you're working with that lender. Now, one of the questions I always had, and maybe this is something you can answer, is based on the incentive that the lender is giving back, is that something that you're offering maybe typically a higher interest rate or?
Great question. So the rundown on interest rates, we all want to be competitive, all lenders, right? But the banks set the interest rates based on their margins, how much they want to make afterwards. And truthfully, when the builder does give you $10,000, $20 in incentive, they are truthfully making $10,000 or $20,000 less in their overall profit margin. But
that's coming from the builder, not your margin.
Correct, but they're all usually owned by the same parent company, right? So at the end of the day, it's coming out of the same parent company's bucket, right? So typically, to your point, in turn, you usually see a higher interest rate so that the bottom line number kind of, washes out, so to speak. So it's something where you have to push back a little bit on the lender. I had a lot of people that pushed back on me and said, hey, this lender is offering me this. What can you do for me? So if you are going to go new construction, definitely push back a little bit, see what you can do. And, if they can lower it, they'll negotiate with you a little bit. I will say on the financing side, you have a little bit more wiggle room to negotiating versus a builder where sometimes they're like a no haggle, like a CarMax. This is the sales price. There is no negotiating. This is how much the EMD is. Pay it or don't. Not every builder is like that, but a majority.
Majority. And now how about from let's in the down payment side. Yeah. So I would think from a builder's perspective is that you want buyers that are putting more money down because a loan is risk-based. The more you're investing in real estate, the less likely you are going to default because you're putting your money, your savings down on it. Because it was when you look at the crash back in 07, 08, the big crashes, a lot of people that let the homes go didn't really have much financial investment into it. It's 100% financing, all the closing costs. Why go and stress myself and unload my bank account to save this home that I have no investment in? So when you look at a new build, typically they probably want a little bit of money down because there's a lot of programs out there. State of Maryland has 20 or 30 different home buyer assistance programs that help you cover down payment and closing costs. Now, generally speaking, did you see a lot of builders that worked within those programs?
So not every builder or lender is an approved lender for these down payment assistance programs. So that's step one, finding out if it's even something that they can offer. Step two, most of the time, in all honesty, the lender gets paid less if you do down payment assistance programs. So it's not always one that someone's advertising and pushing. It may be only if the customer asks.
Okay.
Which is another thing, if you're educating yourself as a home buyer, if your lender isn't providing you with at least 3 different options, to me, that's a sign that they're not fully educating you on all the products that are out there. If you have to ask them for down payment assistance, there's something wrong, right? They should be offering it to you.
And I think it's like when you get into down payment assistance, and I love those programs because, again, majority of home buyers out there that couldn't buy in the market can now use these programs and buy in the market. Now, that being said, typically those assistance programs can help you up to like 3 to 5% of the cost. With down payment assistance, when you get into new home construction, I feel like resales anywhere from 8 to 9%, down payment and closing costs on the minimum basis. And then you get into new home construction, it can be 10 to 12% is what you're going to need out of pocket. So if you're getting that a little bit of savings covered through assistance program, there's still a big portion that you're going to have to put out of pocket as far as down payment and closing costs. Now, it's just like buying a car. The more you put down, the lower your monthly payment's going to be. If you use assistance programs, typically the interest rate's a little bit higher, but then you're getting the assistance to cover the down payment so you can purchase the home. So you have to look at all factors. And that's like going back to our original point, is that before you would step foot in a model home, be like, that is like the model home's lava. You can't touch it. You can't touch it until you know where you are financially, because I've been through hundreds of model homes, Maryland, Delaware, DC. Like, I'm yet to walk out of a model home for a bigger builder that I'm like, I don't like that house. There's always something I love about that home. And they're built with all the modern amenities, like the owner's suite and bathroom is spa-like, the laundry room's on the living floor. Like, you just look at all the points that they touch on when you go in that model home, and people are just walking away like, I have to have that home. The basement's fully finished with a movie theater. You're like, and your favorite movie happened to be on the screen. Like they know that before you come in. AI's like, all right, Mrs. Smith is coming in, loves this movie, and they're playing that. So, but the thing that you want to do before you step in is like, know your thresholds. Know how far you can go financially. So if you step in that home and, hey, it was a good look, but it doesn't meet where you want to be financially, set that as a goal, though.
I was going to say, it will give you so much more leverage, too, right? When you say, I need my payment here and I need my cash out of pocket here, and if you want my business, you can make it happen, right? I mean, they can make a couple phone calls. If they need a sale, they're, like you said, just like cars, they have quotas that they have to make every month in quarters, and they report to Wall Street. Like, they got to sell these houses. So to know, like you said, gives you that leverage and power and say, this is what I need. How can you make it happen? Or at least they'll meet you in the middle and you bridge the gap. So to your point, find out that information, use it to your benefit, and get what you can. Yeah.
So my goal, my kind of golden rule, you're going out, let's say you're pre-approved to $550,000. I wouldn't be looking at new home construction that if the starting price is less than, or greater than $450,000. So like, when you walk in, the model home's probably got an inflated price of anywhere from 30 to 40%. That's like the upgraded kitchen with the gourmet, refrigerator, and you don't want to be the neighborhood. You don't want to go out in the neighborhood and say, I'm stretching everywhere, so I'm cutting everything out. I'm getting the base house in this neighborhood, and it has nothing that the model home had. You know what I mean? You're like, you're better off, finding something that is in the resale market. Now, we talked a lot about like things to kind of caution, and like, let's kind of shift a little bit into like, who is the right buyer for new construction? And I always say there's 2 kind of categories. The first category, is you're a first-time home buyer and you're very financially stable. You're going to be looking at somewhere, this is your first home, you're keeping your overall debt-to-income ratio somewhere below 40%, 36 to 40% max. That means your total mortgage payment, all your minimum payments on your credit don't exceed 35 to 40% of your gross income, monthly income. And you have 10 to 20% to put down. And if you're in the resale, if you're repurchasing in the market, maybe selling a home and can put a substantial amount of money down, that might be a great option for you. But those are the two that I kind of like. The one that I see that kind of the category that I always see the struggle is the first time home buyer that is just stretching every nickel and dime to buy new construction when there's just better ways to purchase out there.
Yeah.
I mean, what are you?
I agree with that. I think if you're going to do new construction as a first-time home buyer, do a quick move-in. One that is already built, ready to go, so that when you're walking in, to your point, you see what you're getting, right? We're not at the stage anymore. If we're building, we're adding options, things like that, because then that's where the costs accrue, right? Some builders have you go to what's called a design center. So you purchase the home for one price.
Yes.
Then you go to the design center, which is like a Costco-sized warehouse with blinds, lights, you can put speakers in your walls and have flashing lights inside, right? And then I've literally had people come back $20, $40, $50, $80,000 in options, and now the numbers are night and day from what I showed them when they first purchased the house. And sometimes you have 14 days to make these decisions, and there's no take backsies, or you'll forfeit your EMD. So I'm going on a tangent, but I think if you do new construction as a first-time home buyer, my recommendation would be, hey, maybe look at one that's already built, ready, so you already know what the sales price is, you know what you're getting when you walk in, versus having to start from scratch.
And that's taking the category first-time home buyer. So like if you're selling a home, you're getting a huge chunk of equity from your home, you're putting that down. Like I know I built a home last year. We finished our home last year, and the cost is always greater than what it's originally projected. You get into it and you're like, man, I really want to have this fancy surround sound system or all these things that just add up in price. And, when you look at new home construction, there's also cost even on the baseline. So if you're talking about that ready to deliver home, there's a lot of things that are not included. Like you may not have a deck off the rear. You may not have blinds like you talked about, and like blinds are expensive. You're not going to buy a $500,000-$600,000 home and go to Temu to get your blinds. So like, there's things that cost more money when you purchase these homes that you got to look at the full picture when buying a home. And I feel like maybe so far we've been talking a lot about like, hey, the cautionary, but there are some good things to the new home construction.
100%.
And when we look at some of the builders, some builders there's different quality type builders. Like you look at like Ryan Homes and NV Homes. Like Ryan is kind of more their baseline home. The NV is a little bit more their luxury home. Like I always say, do your research. And this is, before you would make a purchase in new home construction is go and read the reviews. Like what are the people struggling with? And I think the number one struggle that we see a lot is that you get a house that's under warranty. I went through this ourselves. Your house is warranted. You move in and you start noticing the things that should have been done when you built that home. So when you read a lot of these reviews, it seems like a lot of the builders, their biggest gripe is that, we had these things were wrong and the builder didn't jump on them right away. And when the frustration as they linger, usually what a builder will do is they'll do a pre-inspection before you close, called the blue tape inspection. You go through with blue tape and you tape everything that's imperfections on the home. You're going to notice more when you move in. And a good thing to always have into your contract is have that 1 year blue tape inspection. So typically everything's covered for the first year. And then you're going to have them come back in and kind of touch your home back up. So one of the most important things, like when you're getting into the home, and in some cases it may be even pre-inspecting. You think that a new home that's under warranty and everything, do I need to have an inspection built into it? From the finance perspective, do you guys do appraisals?
So we do appraisals, and that's another thing to check with your contract too, especially in new builds, because sometimes, especially on conventional loans, let's say the home under appraises because of any options you put in, typically it's your responsibility as the buyer to make up that difference if you want to move forward with the purchase of the home. So something to check out there too.
That is really important. So basically, if you go out and you contract for $550,000, you put $50,000 of upgrades. Now you got a loan for $600,000, and the appraisal comes in at $575,000. So you're still doing your down payment plus another $25,000 to get that loan. So got to be really cautious with the numbers when you move into to new home construction. Now, credit-wise, so we touch base down payment, earnest money deposit, a little bit on appraisals, but like from a credit perspective, builders probably prefer more like conventional. FHA is still good. You know, you can have strong FHA buyers. You got VA loans. Not too many new home construction we're seeing in like USDA markets, but from your perspective, what do you see generally? Like if you're looking at a year back, what percentage of your clients are conventional, cash, you know, FHA? What are the majorities that you're seeing as home buyers?
Yeah, I mean, so as you know, it's been an interesting market, and affordability is always like a hot topic, right? So I do think affordability-wise, I see more FHA and VA buyers, just more because of credit and debt-to-income ratio, what they allow. But to your point, however, especially with the builders, lenders, the thresholds are just higher, right? So instead of below 600, sometimes you have to be at a 620. Instead of allowing you to be able to go up to 56%, it's a 50%. So you may not have as many flexibility with the builder as you would with what we call like an outside lender, another lender that's not associated with the builder.
Yeah, and one of the pre-checks to the market is really, you know, checking credit. And I think, you know, you got to be cautious when you go into banking credit, because we talk to a lot of buyers. They come in and they're pulling their Vantage scores, which is like your Credit Karma. Some of your companies that have Vantage versus FICO. So most banks look in the FICO score. That's a complete history of your credit. Vantage is typically looking at your most recent credit history. So maybe over the last 2 years, you've had really good credit. And then, you know, 5 years ago, you had all this damage to your credit. Well, when you're looking at credit, you're looking at the complete history.
Correct.
So if you're out there and you're using a lot of the free websites that are pulling like a Vantage score, one of my recommendations, if you want to check your scores, is go to one of the 3 credit agencies. You know, go directly to TransUnion, Equifax, or Experian. And any of those sites can pull what's called a tri-merge score. And talk a little bit, what does the builder ultimately want? So a FICO scores what you go off on, middle score.
Yep, correct.
What does typically the builder want to see in FICO scores?
I would say typically they want to see at least a 620.
Okay.
If not higher. And everyone, and I'm victim to this too, I use Credit Karma, right? It's a great tool to track trends, right? Maybe you've paid something off and your score is going up, but it is very common that when we as a lender pull your tri-merge mortgage report, the score is going to be lower. So if Credit Karma is showing you 620, I would be confident that your score is probably less than 620. So just something to think about there. Like you said, doing your research on more of the credit bureau's website directly. Because it does weigh heavily on more derogatory marks and for like a longer period of time. Like you said, more of like a 10-year stretch. And anything that is derogatory is weighed more heavily because you're taking out a larger debt. And
I think when you look at credit, credit is very repairable. So, I mean, if you're listening, you're like, man, I just really want to buy a home. But, you know, I've had some issues with credit. I know last year there was some talks. I think it was like July of 25. They were talking about how lenders might be looking into options for Vantage score-based programs, which means, hey, I had some mistakes many years ago on my credit. Over the last couple of years, I've been fighting to get my credit clean. We're going, you know, and, you know, those are the things that we're starting to see some changes in the industry that may evolve to help more buyers be able to buy in the market. So my first recommendation on credit is know that it's repairable. But you also have to be cautious. That's what when we go back to like getting that pre-screen, that snapshot, and getting a lender like yourself to take a look at your credit and make some recommendations, because you don't want to go into any kind of credit counseling or different programs that could actually be worse, kind of looked at as like a bankruptcy or something. And I know we could go on a 45-minute tangent on credit because it's one of those sensitive subjects where I think a lot of buyers kind of pump the brakes on, you know, looking at homes because their fear is the credit, you know, or, you know, so just know that things are fixable in the credit category but you also have to pull the category that the lender is going to be looking at. So always go to your major credit bureaus. And like I said, there's a lot of different options out there to clean credit up. And don't let that fear, you know, kind of set back and saying, hey, I'm not buying a home because I don't think I know where I am. That's why that pre-screening, you know, if you're looking, typically I would tell somebody, if you're looking 6 months to a year to purchase, that's when you want to really start the process. You don't want to walk in that model home, fall in love with everything that model home has to offer, and then you're trying to scramble every dollar, every point on credit to get it to work out. It'd be a very frustrating process. So, so we've gone over like, credit, and from what your perspective, I mean, what kind of credits were you seeing? Like, you did a lot of clients through new home construction.
Yeah.
Were more clients on the lower 600s? Were they upper 700s?
I'm going to say mid to high 600s, where I would say, and just in my experience, where I would have to put someone. And to your point, a lender that really wants to earn your business is willing to talk to you months in advance of when you're going to make that purchase, right? And the right lenders have tools like credit simulators, credit action plans. There are so many credit repair people out there, no shade to that I've seen so many people fall victim to, I'm paying this subscription every month, or I pay this amount every month. And I'm like, hey, Sheila, you could just call them directly and negotiate for pennies on the dollar, and we can do what's called a credit rescore and get this wrapped up for you in 30 days. So don't be, like you said, scared or embarrassed. I promise any lender has seen way worse credit or any situation that you feel you might have. And if they want to work with you, they'll put in that time and give you the advice and the action plan that you need so that you're ready. And Ryan, the worst feeling ever is I have seen families watch a house be built, and when we get to closing, for one reason or another, they can no longer purchase that home, and it is heart crushing. I mean, there are people that buy a new construction without even getting pre-approved, and then you're trying to work it out through the process, and then to have a home that was built for you, and then you can't. I mean, it's heartbreaking. That's not something you want to.
We get a lot of buyers in that situation through our master classes on the purchase side. So we do a lot of the training to helping people, and it's like what we look at is I mean, you can, when I have that conversation, and typically somebody's like, I'm under if somebody calls me, I'm under contract, I'm looking for assistance programs, almost 8 out of 10 conversations lead to, I'm under contract for new home construction. One of the reasons I've reached out to you today to do this show is because my heart goes out to those people that like walk into the home, the model home, they're emotionally attached to that home. The sales rep is like, you need to sign here. I got 4 other people that want this house, and it's just the sales tactic to get you to put your deposit down, sign the paperwork. We'll figure out the numbers later. You love this home. It's perfect for your family. And then fast forward 2 or 3 weeks later, and you're coming up on that closing date, and you're looking at that bottom line number that you got to bring to the closing table, and the shock sets in. I'm like, what am I doing? I'm depleting my savings. Grandma's only giving me X amount of money. Whatever it may be. You're scrambling, and I feel like that's one of my frustrating parts. I love new home construction. I think getting a new home is great. I think everybody should consider that in your search if it meets your financials. What I don't like is the process of going into a model home, being sold a home. I think when you go into a home, whether it's a resale or a model home, you walk away, let it digest, sleep on it, look at the numbers, look at the payment. If you wake up the next day and you're getting those positive vibes and you have the money, it's in your budget, it's in your frame, go for it. I love the American dream. I love the home ownership. I love the results of somebody owning a home and 5 years later selling it and walking away with a ton of equity. Love everything about the home buying process. But I don't like the process when somebody feels like they're stretched or they're going to have buyer's remorse because they spent too much money. And that's why, like, hearing your background and hearing the conversations that I have every day with buyers that are in that tight situation, maybe listening to this show today will make them reach out to you.
Please.
Reach out to you and just say, look, I just want to do a pre-screen. Where is my strengths and weaknesses financially? What can I do and what can I not do in the real estate? What should I avoid? Where should I look? And that's one of the strategies. My team helps you find the home. Your team helps you, finance the home. And I think the combination is what, if you have a good team that's working behind you, the stress of buying a home, you're not gonna push through those thresholds. You're gonna keep in balance. I mean, right before we got on the show, I was getting a text message from a client that's loves this home because it's the size they want, but it's not in the right condition. They're like, we'll just remodel the whole thing. And I'm like, pump your brakes a little bit. You're talking about putting $200,000 into a house that's not going to be worth it at the end. So you're always trying to stretch. One thing I like about real estate is it's not a forever purchase. It's not like when you buy this, like you bought your first car, you're like, I'm going to have this car the rest of my life. And then a couple years later, you're like, I'm selling this thing.
I don't think I've ever paid a car off.
Yeah, exactly. So with a house, it's like, it's not most cases, it's not a long-term investment. But in the short-term investment, you want to be able to say, this thing is going to go up in value. I'm going to sell it and get that next home that I want. So the goal, especially if you're newer to the buying process, is start working the ladder. You know, be in the realistic category. Don't be mortgage poor, because the last thing you want to do is struggle to pay your monthly payment or struggle to do the things you want to do in life because your payment is taking away from that. And, you know, your house, your friends don't care about the house that you bought. You do, you know, and like it is a showpiece, but again, live within your means. And I guarantee you over time that will grow into something greater, you know? So, you know, appreciate you coming out and, you know, just, you know, being able to give a little insight to the finance side. Again, I'm going to post your information. You know, if there's any, you know, reach out to Samantha. She's great. I mean, she takes the time. I hear her interacting with clients, and, you know, you will guide them in the right direction. And the experience coming from the resale market, the new home construction, be able to have that well-rounded approach is so beneficial to a client versus going out to, you know, one of the Rocket Mortgage or something, and there's somebody sitting behind a desk that doesn't even, you're a number in the system. It's a total different experience when we work with somebody like Sam that can really guide you where you want to be. And then Sam gives us a lot of guidance where the clients, you know, this is their threshold. So we try to keep clients in that.
And we want to be your lender for life, right? A new construction home can fit your lifestyle. I was fortunate enough to get a new construction home at the beach. My family probably would have never been able to afford it if it wasn't for these circumstances. So to your point, even if we're not the one that can help you, because there are a lot of benefits of using that lender, reach out to us and we can guide you, because you may not be in that home forever. So you'll think about us when you're ready to sell that home or refinance that home. So know that you can reach out to us and we'll just educate you on the whole process, and you can make what's the best decision for you at the time.
Absolutely. Well, we appreciate you coming out, and, you know, I'm going to post all of Sam's information. You reach out to Sam. She's amazing. She'll take the time and work through it. We're on the real estate side, like, you know, but, you know, leaving it, we're not anti, you know, new home construction.
That's right. That's
you know,
right.
It's just this, I wanted to really talk about, harp on the things, the cautions.
Yep.
You know, if you're really strong financially, jump into it. But if you feel like you don't have the 20% down, there's a lot of, you know, there's a lot of stretching you need to do to get into new home construction. Don't go into the model homes. Talk to Sam. She'll guide you to, you know, before you step in, and let you know if that's an option. And but we appreciate you coming out today and going through this.
Yeah, I appreciate it, Ryan. Thank you.
All right.